Hi there, traders. This is Brad Gilbert with the week ahead. It's Monday, the 22nd of April. All right, now as we start the Asian session, the start of the week, we've got a sort of clear risk on profile here on the North American equity futures. And that's creating not like a super crystal clear profile. We've got Euro, Aussie, Sterling, Kiwi going up, which is a good thing. Then you got most US dollar pairs going down, which is the profile for a risk on sort of situation, except for the two sort of safe havens, the Swiss and the yen, the odd ones out there at the moment. So it's a little bit, there's a bit of balance. It's always good to see the equity markets kick in and the currency markets follow those across. Now, just looking at where the charts finished up last week, okay, the dollar to me, it's looking fatigued, right? Once again, we are starting to see the moves. They're very powerful instantly on US numbers, and then it just falls in a heap. So we are seeing the dollar up move. Well, stalled here against the euro. Unfortunately, for sterling traders, right, we had the CPI data on Wednesday, a little bit stronger. You get the retail sales figures Friday, which were terrible, and it's a bit of a flush out. So pretty tough fundamental trade at the moment. Aussie and the Kiwi are picking themselves up off the floor, as is the CAD, right? So, and this is what I'm talking about, dollar yen and dollar Swiss, the two odd ones out. So this is sort of good, right? We can start to see a bit more about what's going on with the dollar. This is like a living organism, right? You can actually feel it fatigued. It wants a rest. It wants to go back the other way. And I was reading a lot of key data from a couple of guys I used to work with at Citibank, talking about the risk appetite out there and what real risk managers have got and what they're looking at. They have pushed back, obviously, the chance of a rate cut in the US at this stage. But the key aspect that all of their respondents were talking about was how fickle the market is at the moment, or how responsive. One data release will change the Fed's outlook dramatically, and vice versa. They'll go to a cut, to a no cut in one release, and that's very unusual. So you've got to absorb or understand that information. So when it comes time to trade, you know that actually any of these key numbers, inflation, employment, probably the two key ones, have the potential to flip things around very quickly, and we get a big move. Sort of almost like what we did with that last US CPI number, which came out, 0.1 better than expected, but we got a massive shift in the market. So I'm expecting that to be reversed if we see the data flip, right? Month to month, it's sort of the way things are at the moment. Now, just having a look at the week, the shape of the week, this is a pretty good week coming up. We've got Aussie inflation numbers Wednesday, US durable goods, like a good second tier number. And then US inflation lookers will be watching the PCE price index on Friday to see what's going on there. But the devil is in the detail, right? And knowing what to look at, because if I drop this back to like 2-star, right, where you find all the second tier, some of the third tier numbers, you start to go through the week and there is plenty to look at. If you're a Canadian dollar trader, we'll check out the new housing price data here on Monday. A good one to start the week off, get a bit of an idea of how the data impacts the various instruments. We're coming into Tuesday. We've got, you got some Euro consumer confidence numbers. This HCOB manufacturing PMI number, I don't know how historical that is, but the manufacturing PMI numbers are important. That goes for the US as well. So these are I would consider these all second tier numbers. And what that means is they have the power to impact the market, but not dramatically where liquidity disappears like it does with the inflation numbers and in particular, the employment numbers, right? So you get normal trading markets, they see the numbers, and then they start to drift. So Tuesday, shaping up as potentially the start of some decent sort of moves. You've got those new house sales numbers there as well. As I mentioned, Wednesday, Aussie inflation numbers, important obviously for the RBA outlook. Canadian retail sales figures, and also US durable goods. Now, just putting that together, I mean, it's a pretty good day for dollar CAD, right? You got to be careful because these two releases come out at the same time. But if they're opposite, you're going to get a decent one-way move in dollar CAD in particular, or take the US dollar out of it, look at the CAD crosses, and or focus just on the majors. So these are two good second tier numbers that, once again, don't be afraid. There's not going to be any liquidity gaps unless there was some crazy number coming out. Coming to Thursday's numbers, the GDP growth numbers, it's sort of starting to come back into play, right? Because all the numbers have leveled out. Now it comes back to GDP. We want to look under the hood of the bonnet, or the bonnet of the car, to see what is actually happening on the engine. And that's what the GDP numbers do for us. So once again, a nice cruisy number, no major liquidity issues as we go through that. And then once we get into sort of Thursday, besides the GDP numbers, you got the weekly jobless claims, always a chance for that random number to come into play. US pending home sales, GfK consumer confidence in the UK, BOJ, I'm not holding my breath there. And then you've got the PCE price index and personal spending and income, right? So all these numbers, and even the PCE price index, doesn't usually see liquidity issues. So this being like almost the last week of the month, right? It is a good week. We've got good second tier numbers. It's almost a shame that we have the really top tier, because it distorts price action so much that you can't, it's hard to get into the trades, hard to manage the positions and all those various things, where this week the numbers are friendly, right? That's what I'm telling you, right? So don't be afraid of what's coming out. Have a look what is coming out. If anything, the Aussie inflation numbers might be a little bit jittery. Outside of that, the rest of the numbers, I would be saying that they are all in play. And what it means is, don't just go and trade the number. Find out the instruments which have good, clear direction, and then go from there. To me, where I'm looking at the charts at the moment, looking for the dollar, looks fatigued. It looks like it wants to go back to where it was. I'll be watching the S&P PMI numbers, the durable goods numbers in particular, Tuesday, Wednesday, and maybe these new home sales numbers, because we should get some shape around the dollar. And if these numbers start to fall, well, we see that retracement being a very easy move, okay? To get things moving on the top side, like you're looking at now that these things have consolidated, the euro, not so much the sterling, it's had that issue with its own data. But now that all these instruments have consolidated a bit, okay, it's hard to, you've got to get the momentum going again, right? So if you want the dollar to keep rallying from here, we need substantially stronger numbers across the board. And you know what? There's a chance of us getting that, because the numbers have been pretty consistent out of the US since the start of the year. But so, excuse me. So there's two parts to it, right? You either get a couple of these days of US numbers building up, especially the durable goods and even jobless claims, GDP numbers. If they're all sort of going through the roof, well, then that's going to be enough to get the dollar moving again. Outside of that, we see weakness or just as expected. Well, yeah, that's right. Even if these come out as expected, I'd expect the dollar to start drifting lower, right? Because it's run out of steam. It needs fresh fuel to the fire to get it rocking and rolling. Okay, so that's where we are, guys. So just keep an eye on the markets at the moment. You want to be, just keep abreast of what's happening across the various financial markets, whether it's the equities, the bonds, or the currencies, and then start to pick them off. Commodities having a bit of a tough time of it at the moment, right? Which is funny that Aussie, Kiwi, CAD are going up. They are commodity currencies. No natural correlation between that and those currencies at the moment. All right, guys, good week ahead. A lot more relaxed, a lot more chilled. So take your time and get your technical charts, or get your charts up to speed with the current levels, and that'll enable you to take advantage of the opportunities when they come up. All right, guys, have a good one. All the best. Cheerio.